Alrighty, welcome to a video explaining my current strategy. Pretty much, I like to just clarify that my strategy isn't a step-by-step system as such. Um, I've written this out just so it can be visualized, but I don't like to follow a step wait for this, step wait for this, step wait for that because when it's systemized, I find it really tricky and I put a lot of pressure on myself to follow those steps exactly. And what I end up doing is forcing those steps to happen and looking for absolutely anything to make those steps a success. So, the most important part of my strategy is the fluidity and being able to just be fluid and react to what price is telling me on that day because price is different every single day, right? Not not microphone over. Sorry about that. I just punched my microphone in the face. But price is different, right? Every single day. So there's not going to be a system, a step-by-step system you can apply every single day and will give you a setup every single day. Maybe not even every single week. Because what I used to do was I did have a systemized step-by-step system, and it worked for about 2 weeks, and then there was 2 weeks straight of just like straight losses, a full week of a loss, and that made me realize, right, I need to be fluid. I need to just react to what price is telling me and read the price action and just react to what it's going on instead of looking for a step-by-step system from the 9:30 open. So, as you can see on the screen, this is the strategy. I will talk through it in a moment, but I'd like to say any questions, do not hesitate to add me on Discord and contact me because I'll get back to you. Do not hesitate to just leave questions in the comments. Add me on Discord and leave questions on Discord too. I will always answer. Do not hesitate to ask. So let's jump right in to this. So, as I said, be fluid. Be fluid. So first, what I do pre-market and what you see in the trade recaps is I identify the attainable 4 hour or 1 hour targets for price that day. So that's whether that's highs, lows, or imbalances, because price is doing one of four things at any given time: rebalancing an imbalance, rebalancing to equilibrium, but I don't like to use that. Seeking liquidity or generating liquidity. So identify the attainable 4 hour or 1 hour highs, lows, and imbalances that are close to where price is before market open. Usually, I get on the chart. I get on the charts about 9 o'clock, so half an hour before market open, and start doing this. And then you've got to identify as well on the 15 minute, not the 5 minute. I don't like using 5 minute liquidity or 1 minute liquidity. Identify 15 minute liquidity or 15 minute imbalances that could be used in order to reach them. I don't tend to use 15-minute imbalances, just 15-minute liquidity. So, in order to get to those attainable targets, price might have to come towards 15-minute liquidity in order to give it that catalyst to get up to those higher time frame targets, or vice versa, it could get up to those higher time frame targets, and that's the catalyst for it to come towards the 15-minute targets. So it's just about being fluid to what price is doing. I say on my trade recaps every day, it could go up, it could go down, and it really just depends where price moves to first, and then I take a trade based off of that. So the first scenario is the attainable 4 hour or 1 hour targets are hit first. So say there's a 4 hour high, for example, and price market opens at 9:30 and takes that 4 hour high. That means I'm waiting for confirmations out of that to show it's valid. That can just be a 1 minute breaker structure or a 1 minute inverse value gap. So if I've seen a 4 hour or 1 hour high taken, I'll look for a 1 minute break or a 1 minute inverse value gap on both indices at ideally the same time. So I treat inverse fair value gap and breaker structure as the same. So say 4 hour highs have been swept, NQ breaks 1 minute structure, and then ES inverses an imbalance at the same time. That's the same for me. I'm like, cool, right? I can start looking from that. Now, before anything else, I'll have that 1 minute confirmation out of the liquidity to show that sweep is a valid sweep, and then I'll wait for a 5 minute candle back away from where I want to take a trade. So this I can get rid of that. So what I want to see, those 4-hour highs have been swept out. And we've had a 1 minute break and a 1 minute inverse, or well, 2 1 minute breaks on the same index, no, on the same time on both indexes. And then this usually means there'll be a 5 minute candle in the direction you want anyway. So say you're looking for a short because the highs have been swept, you wait for a 5 minute down candle or that 1 minute confirmation, like I just said, that 5 minute down candle, and then you're waiting for a 5 minute close back in the opposite direction again. Why? Because after a 4-hour sweep, right, that's a pretty high time frame. Price isn't just gonna dump on the 1 minute, is it? It's gonna have to form that higher time frame structure. And how do you form structure? You need to make highs, you need to make lows. And bearish structure, remember, is lower highs and lower lows, and bullish structure is higher highs and higher lows. So in order for that retrace to be valid, we need to form that low or the high and make a higher high or make a lower high. So in this example, we've had our 4-hour highs swept out, right? We've had that 1 minute confirmation on both indices at the same time. We've had then a 5 minute close back up again, because that makes that lower high, you can say. We've had a 5 minute close back up. So we've had a 5 minute up candle close. As soon as that candle closes, go on the 1 minute and look for your executions. Now, executions can be a 1 minute break of structure, a 1 minute imbalance being respected, 1 minute equilibrium, 1 minute order block, and then moves lower. Pretty simple. Or the 1 minute execution can be confluences in the other direction getting disrespected. So say you're looking for a short, let's keep the same situation. 4-hour highs swept, 1 minute confirmation at the same time on both indices, that's a mouthful. 5 minute candle back up, and then you start seeing 1 minute fair value gap getting disrespected, or a 1 minute bullish order block getting ran through. And then, oh, slight little retrace back to 1 minute equilibrium. Boom, there's your entry. Target those 15-minute liquidity or fair value gaps that could be used in order to reach them. So pretty simple stuff. This A section is, it's just like, right, high time frame, liquidity or fair value gap hit, 5 minute retrace, 1 minute execution. Simple. Second situation, those 15-minute targets are hit first. So what am I looking for? Say a 15-minute low gets taken. We need to get that confirmation out of them to know that it's a valid sweep. 15-minute low hit, 1 minute break of structure on both indices at the same time. Cool. Then I'm looking for just a 1 minute execution because it's a low time frame liquidity sweep. 1 minute order block, 1 minute equilibrium, boom, long up to those attainable targets. That is my strategy, as simple as it is. The most important factor of my strategy is just being fluid, reacting off of what price action is telling you. Simple stuff. Now, some of the rules that I apply to this strategy is I only like to trade between 9:30 and 11 a.m. New York time, because I feel any time after 11 a.m. confluences just don't hold anymore, and it's just whatever it prices whatever it wants. 9:30 to 11 is the best time for me to take any trades. I don't wait for like a 9:50 macro. I don't. Whoa! Sorry about that. I don't wait for like confirmation. No, what? I lost my train of thought now. I don't wait for news necessarily. If a setup comes before news, I'll take it because news often is that catalyst to get price where it wants to go. But if there's no setup like 5 minutes before news, I'll just wait for news. Another rule, both indexes, so ES and NQ, must be saying the same thing. I've said this a lot throughout the explanation, but I like to see both indices telling the same thing. Because if, say you're looking at NQ and there's been a low swept, there's been that 5-minute down close, you're looking for a long, but say on ES, there's no 5-minute down close, or it's only took out 15-minute liquidity, you're still waiting for that 5-minute retrace on NQ, so you may as well wait for that 5-minute retrace on ES. Just wait for the indexes to be telling you the same thing. You want to see breaks at the same time, the same confluences being respected. Obviously, they're not going to be identical because they're different indexes, but giving the same confluences to take the same trade is really useful, because there could be confluences for a short on one and a long on another. Just don't trade. Like, wait for the indexes to be telling you the same thing. And another thing, if one index has taken out 1 hour liquidity, for example, but one's taken out only 15-minute liquidity, wait for that 5-minute retrace still, because technically, on the one that's took out 15-minute liquidity, you could go onto the 1 minute and look for an execution. But the likely scenario is the one that's took out the higher time frame liquidity will still be getting that 5-minute retrace. So the other one will as well. So just wait. And then 2 trades maximum, ideally just 1, but 2. If the setup comes, you're not that confident, de-risk. Maybe there's a better one coming, or just not take it if you're not confident. But split your risk up accordingly if you're going to take more than 1 trade. And then golden rules: have absolute maximum patience. There's no need to rush anything. Market isn't going anywhere. If you miss out the trade, you miss out the trade. If you never get that 5-minute retrace candle in the opposite direction, you don't take a trade. Simple. Just have maximum patience and wait for all confirmations, because if you don't wait for confirmations and you take a losing trade, you're going to beat yourself up. If you do wait for confirmations and you don't get them and you don't take a trade, you can pat yourself on the back. Or if you don't wait for them and take a winning trade, it's a bad trade and you've built bad habits, and you do not want to be building bad habits, because 80% of the time it won't have played out. So just have absolute patience and be an observer. Just observe price and react to what it's telling you. There's no need to try and predict it. There's no need to try and guess it. Just purely just observe what it's telling you and react accordingly. Right? That's it. That's my strategy. Plain and simple. So we can go over some of the trades that I took with this strategy. We can go over the one that I took yesterday on ES. And price action was a bit dodgy yesterday. I know. A lot of people were saying that it was pretty horrendous price action. But we can see here, make that black. And we go on NQ and just do the same thing. Monday 9:30. We've got hourly lows here. Move down, then a move up. Hourly low. Hourly low right there. And then news comes out 9:45. Right, we're waiting for that still. We then get a break of structure. Yes, we get one there. But I didn't really count that because it was by like 25 cents. Right here, 9:48, we get NQ breaks 1-minute structure, pushes above a high. ES at 9:48. 9:48 right here. Inverse is this 1-minute imbalance. Awesome. They're saying the same thing. Now, because it's a 1-hour low, waiting for that 5-minute down candle retrace. Right? This candle closes at 9:55. It opens at 9:50. Closes at 9:55. Boom. There's our 5-minute retrace. NQ at the same time. 9:50. And 9:55. We get 2 black candles. But as soon as this one closes, boom, you can look for an entry. Right there. 9:55 that candle closes. So, hop on the 1-minute after that down candle closes. What time is it? 9:55. We can look for an entry after 9:55 because that's when the first black candle closed. What do we have here? Inverse imbalance in line with another imbalance. After this candle, we get a leg down into it. We've also got equilibrium. There's our closeout. What I did yesterday, though, was as this was happening, checked NQ. And I saw yesterday, right, there's not really an imbalance at that time. There's this one, though, at that same time. And then there's also at 10 a.m. when this setup was forming. So this setup was forming. There's when the 5-minute down candle closed. This setup was forming right here off of this imbalance. What time is this? 9:59, 10 o'clock. NQ at that time. 9.59, made an imbalance, right? I want to take the trade on ES anyway because it just gave the better opportunity and the better setup because this imbalance got disrespected as well. I wanted to wait for extra confirmation. Boom, NQ invalidates this one. That's my entry on ES. And that candle closed. So I entered right here. I have my stop there. And where do you target? Well, you've got 1 hour highs here and you've got 4 hour highs there. So, what did I target? I targeted those. And that was my trade. So that's simple, nice and simple trade execution. Following that strategy. And then we can go to Friday, because I know on Friday we got a trade just off the 15-minute. Delete all of that. So we go to Friday at 9:30 on both. 9:30, right, here we go. So, where is price likely to draw towards at this time? Well, there's hourly lows right there. NQ, same sort of thing. Hourly lows right there. Hourly lows there. Hourly lows there. It's probably a very high time frame imbalance right here as well. Where's price likely to draw towards? There. How can price get there? We've got 15-minute highs there. ES, we got 15-minute highs there too. Now, what was I looking at on Friday? Well, if these got hit first, I could look for longs, but there's 11 a.m. No setup came from them anyway. But on NQ, what are we looking for? Well, 15-minute highs get hit. What does that mean? We can go straight onto the 1-minute look. So here's the 15-minute highs. They're hit. We can go straight onto the 1-minute. Now, what am I looking at on the 1-minute? Well, we get a breaker structure there at 9:39. ES. Goes back to Friday, actually. There we go. Where's the 9:39 candle? Right here. Didn't break at the same time, which is fine. As you can see, we're nowhere near those 15-minute highs anyway. And then, so there's a break. And then what we're looking at, equilibrium we can draw. Remember, we're not waiting for a 5-minute retrace just because there's no need to. And also there's an order block here as well. That move up, taking out that liquidity. Order block, close out of both. There's our entry. Stop at the high, target those higher time frame lows. It really is quite simple. And I can prove both of those executions to you with my journal. So on Friday, there's that NQ, 15-minute high swept out, formed the SMT because ES didn't get it. Break of structure, order block, entry, move up into equilibrium in the order block, and then move back down again, and boom, there's our entry. And then obviously yesterday, there was the ES trade off the 1 hour sweep, the inverse for value gap, the 5-minute retrace candles, the push into this imbalance, this BPR, reaction out, boom. And also Thursday, as we can see right here, 15-minute highs swept, 1-minute inverse, 2 1-minute inverses, imbalance and equilibrium, entry out of it, target those 1 hour lows, and then off the 1 hour lows, you're waiting for that 5-minute down candle retrace. I think a 5-minute down candle closed around here. Imbalance, equilibrium, wicked, enter, boom. But I took the trade on ES. We had the 5-minute break of structure off the 1 hour fair value gap being filled. 5-minute down candle formed. Entry off of that 5-minute imbalance and 5-minute equilibrium not quite getting hit. But this 5-minute order block as well, because this is a move down that swept out the 1 hour imbalance. So yeah, it's pretty. Do I have the strategy? But whoa. So yeah, it's a pretty nice strategy to follow, to be honest. I TJR did teach this, and then I adapted it, added my own rules as well. But this is what I am trading currently, and it's been working quite well for me. And just the important factor, the most important factor is just being fluid. Do not follow this step by step because it will put pressure on you. I used to follow a strategy step by step, put loads of pressure on me, didn't like it at all. I was just trying to find those steps. Just be fluid. Just see what price action is telling you and just react. It makes systemizing trading a little bit harder because it is, but you can't systemize trading. If you could systemize trading, there'd be like AI trading bots winning every single day. You have to be fluid and you have to react to what price is telling you each day, day in and day out, because every single trading day is different and no systemized absolute step by step thing will happen every day and give you a setup every day. So just be fluid and just react to what price is telling you. That is my strategy. Remember, any questions or anything you want to say, add me on Discord. I believe that is my name. I can't see it for some reason. Yeah, James.7988. So any questions at all, don't be afraid to shoot a message across. That is my strategy, and I hope that was helpful. I hope it was informative. I apologize for messing up my speaking at any point. I always find myself rushing when I'm talking sometimes, so apologies for that. But there's my strategy, nice and simple. Be fluid, be patient, and wait for that confirmation. And let the trades come to you. You shouldn't be looking for opportunity in the market. Let the market give you the opportunity. Let the trade come to you. Wait for the full picture to be drawn. And only take the best setups. That is my strategy. I hope this helps. Like, subscribe, comment, whatever. Peace out. See you in the next one.